Sanctions are meant to choke off oil supply, but a hidden fleet is covertly keeping prices lower than they should be. The shadow fleet is a concealed network of tankers that move sanctioned oil. The vessels operate by obscuring locations, routes, and even ownership. This keeps illicit crude flowing despite enforcement pressure. The shadow fleet can also be referred to as the dark fleet because the vessels turn off their locations to hide their illegal activity. That could be going to a port to either fill the vessel or empty the crude. It could also consist of conducting ship-to-ship transfers. That's when oil is moved from one tanker to another on the open ocean. These tactics quietly inject large volumes of discounted crude into the global market, which can keep prices lower than they normally would be. China is the primary buyer of this oil, as well as India.
So it is a trade that is of a significant upside for them if they get it right and they do this covertly, and a significant downside if they get caught doing it, because then they get sanctioned and then it's very hard for them to then operate in the open market.
Approximately 3.7 billion barrels of sanctioned oil were transported by the global shadow fleet in 2025. This oil accounts for 6 to 7% of annual global crude oil flows. Recently, there have been several notable developments in the world of sanctioned oil, with announcements of the U.S.-India trade deal where India will no longer buy Russian oil. Trump also announced the U.S. will be brokering sales on Venezuelan crude. So how does this impact the global shadow fleet? The U.S. brokering of Venezuelan oil has cut the shadow fleet out of that market. Russia had been expanding its shadow fleet with tankers tied to Venezuelan crude. One of them, the Bella 1, which was seized after the U.S. pursued it, even as it was escorted by a Russian sub. At the end of January, French authorities boarded and seized a shadow fleet tanker carrying Russian oil after they discovered it was operating under a false flag.
French Navy.
A move that signals more aggressive enforcement by European governments. That's good news for tanker companies that operate legally and carry insurance. Historically, tariffs on oil have acted more as political tools to enforce high-level negotiations rather than immediate operational constraints on how oil physically moves. Still, a reported U.S.-India trade deal could cut Russian oil exports by 25%, according to shipping group BIMCO. This would also lower the price of Russian crude because of the decrease in demand. So while there is saber-rattling on tariffs to curtail the sale of Iranian crude, those threats are not expected to have a direct or measurable impact on Iranian shipping patterns unless and until they become official. It's important to investors to separate the bluster from reality.